Welcome back to Alpha Recap. Lucy here. Today we're breaking down Friday's market close, which was dominated by speculative momentum and huge volume in a bunch of microcap names. As always, if you have questions, you can reach us at stockalpha.ai and ask directly. Then, thanks for joining.
Thanks for having me. Friday was one of those sessions where the tape told a very clear story, and it's one traders need to respect heading into a long weekend.
So let's start with the headlines. Give us the quick snapshot. What were the biggest moves?
The biggest theme was penny and microcap momentum. The standout was a name that ran up about 114% and finished around $1.09 on roughly 306 million shares. Two other names ripped double digits, one up about 109% to about $1.08 on roughly 227 million shares, and another up about 69% to $2.28 on about 142 million shares. Those are not normal prints for low-price stocks.
Wow, those volume numbers are huge for sub-dollar or low-dollar names. I mean, when you step back and look at this, what does that volume tell you?
When volumes get into the hundreds of millions in penny names, market structure changes. Institutional order flow, block trades, and dark pool fills become feasible. That can bring in different players and also different risks. The move itself suggested a mix of retail momentum chasing, algorithmic scanners lighting up, and likely some short covering pressure.
Short covering. Explain that in plain terms for listeners who might not trade this way all the time.
Sure. Short covering is when traders who borrowed shares to sell earlier are forced to buy them back as the price spikes. That buying adds fuel to the rally, which can force more shorts to cover. It becomes self-reinforcing. In small names with thin floats, that cascade can produce the kind of explosive percentage gains we saw on Friday.
Right. And the other thing is...
Exactly. Add algorithmic momentum scanners and retail platforms that push hard into breakout lists, and you get a lot of volume very quickly. That's why a few names saw double-digit to triple-digit % moves in one session.
Big move. Let's talk about weekend risk. Markets close for the weekend, so how does that amplify things?
Weekend closure increases gap risk significantly. Friday's close becomes the reference point for Monday. If there's no follow-up news, thin volume names can gap down hard as profit-taking or sellers step in when trading resumes. Conversely, any overnight rumor or filing can gap a name higher. With the moves we saw, Monday, March 2nd was set up to be volatile.
So, what really stands out here is that people need to check pre-market prints and size positions more conservatively over a long weekend.
Absolutely. Tight stops, smaller position sizes, and a pre-market checklist for filings or press releases are essentials when you trade these names into a weekend.
Switching gears for a second. Not everything was a momentum pop. There was a corporate finance item in the news. Walk us through that one.
Right. One smaller company announced an at-the-market sales program for up to about $20 million. An ATM gives the company the flexibility to sell shares into the market over time. It's not an immediate dilution, but it sets a real path for future share issuance. Traders should watch for Form 8K filings that disclose actual sales and pricing. Those prints can create steady sell pressure, especially in thinly traded names.
That's the contrast we saw. Speculative rallies on one side and potential dilution on the other. Honestly, I was a bit surprised by this one.
Yeah, that tracks. It's a reminder not to assume every spike equals durable, fundamental improvement. Sometimes the corporate story is actually a headwind.
Let's touch on one of the higher-priced moves we saw. A mid-cap techish name ran up about 57% to roughly $84.23 on about 24 million shares. That felt different.
That was notable. When a stock at that price range moves that much with meaningful volume, it tends to attract options activity and institutional attention much faster than sub-dollar names. Options flow can either amplify the move or provide clues about whether real money is behind it.
Okay, quick practical question. What should traders do Monday morning if they traded one of these tickers Friday?
Watch pre-market price and volume first. Reevaluate stops relative to any gaps. check short interest and options open interest. High short interest increases the odds the move was squeeze-driven, which can mean more volatility. And keep an eye on any SEC filings or press releases that would justify continued strength. If none show up, be ready for early profit taking and faster mean reversion.
Short and sharp. Pre-market checks, size down, stop rules. Got it.
Exactly. Also, for portfolio managers, these intraday moves can skew small cap exposures overnight. Rebalance or hedge if a position has ballooned because of intraday momentum.
Let's take a moment on macro. There was an interesting behavioral signal. Google searches for the word inflation spiked sharply. How should traders interpret that?
A sudden jump in inflation searches is an early warning signal that investor attention is shifting toward rate risk. That can push flows into rate-sensitive sectors like financials and real estate and safe havens such as gold or TIPS. If the media amplifies the story or Fed officials comment, you will see a broader repricing of discount rates, and that can increase volatility across markets. In that environment, speculative names can either rally if risk on is in play or get hit if investors rotate to defensive assets.
Hold on, say that again? If inflation chatter ramps up, we could see capital rotate away from these speculative plays.
Right. Retail money can chase momentum one day and then flee to safety the next if macro headlines shift. That's why monitoring macro headlines over the weekend matters. It changes how liquidity behaves on Monday.
2 quick reaction lines. What are the 3 things you'd want traders to watch first thing Monday, March 2nd?
1. Pre-market price and volume in the biggest movers, the names that ripped on Friday. 2. Any SEC filings or company press releases tied to those names, earnings, contract wins, FDA notes, or ATM execution notices. 3. Options activity and notable block trades that signal institutional participation. If you add a 4th, headline risk, especially inflation or Fed commentary, because that will shape overall risk appetite.
Short and actionable. Love it. And if someone is just listening as a long-term investor, what's your advice?
Don't buy headline-driven spikes if you don't have a fundamental thesis. Wait for a clear catalyst and look for pullbacks to evaluate valuations. These sorts of moves are great for short-term traders, but often dangerous for buy and hold, unless the underlying business story supports it.
Final takeaways. Give me the bottom line for listeners in 2 or 3 bullets.
1. Friday closed with a clear momentum narrative. Lots of microcap and penny stock rallies driven by volume and likely short covering. 2. Weekend closure amplified gap risk, so expect volatile opens Monday, March 2nd and do pre-market checks. 3. Watch corporate filings and macro headlines. An ATM or inflation chatter can flip the trade quickly.
Perfect. Thanks, Ben. That wraps up our recap of Friday's action. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll see you next time on Alpha Recap.